Hi everybody, Alex Deploy here from Expert Forex, and in today's video we're going to be talking about buy energy and sell energy and how you see that energy on the charts. We're also going to look at how you can use volume to create fantastic trades that have small stops and huge targets. So if we look at buy energy and sell energy, buy energy is actually the energy taken by the market to push the price up, as simple as that. And sell energy is basically the energy taken to push the price down, as simple as that. So what can high buy or sell energy do? Let's take the example of a buy trend being in place. Buy energy can increase the trend, but sell energy can slow the trend down. It can even stop the trend. And as we will see later, it can reverse the trend. Now, the good thing is it reverses the trend possibly 70% of the time. It stops the trend a huge percentage of the time and slows it down another good percentage of the time. And the amount of times that it actually increases the trend is a very small percentage. So you don't have to be guessing too much on that. The odds are in your favor if you go for the reverse trend option. Now, how do we see this energy playing out in the market? Firstly, it can best be seen in trading volumes. In other words, if the price is moving up in a buy trend and a whole lot of sell orders come into the market, that sell energy coming into the market, and those sell orders can result in the market slowing down, stopping, or even reversing. Depends on how much volume is pushing the buy energy. The beauty of using volumes is that it is a leading indicator. You can actually see it happening on the chart, and it gives you a warning because you see this energy coming in, or the orders coming in. They come in, and it gives you a couple of minutes to respond, because the market doesn't respond straight away. The volume comes in first. It says, oh, look at that, what should we do? And then it responds, and so it gives you a couple of minutes to respond to what you're seeing on the charts. And this has been one of the most accurate and successful scalping methods that I have personally used a long time back when I still had good eyes. Okay, now here's an example of volume being used to trade. So what we're saying is there's a lot of volume. All of the indicator at the bottom here is a volume indicator. It's a free indicator. It's part of all the MT4 and MT5 platforms. And what we basically do is we say we want to only trade when it reaches a certain level in the market, the volumes. So here we go. Number one, it reaches a certain level. There is the starting point, and there is the trend that results. Now, one of the things you need to look at is clearly you can use very small stops and very big targets using this method. In fact, the biggest problem with this method is that your targets are way too small, and the price hits your target and it continues for another 100 pips. So this is quite an exciting method. And one of the exit methods that go very well with this particular method of trading is you use offset moving averages, and only when the price crosses the moving average you exit, because the trends are normally quite strong. Okay, so that's one example of it, of exceeding, and you can see it happens very quickly, and then the market reacts. Here's another one. There it happened. There it exceeded that limit. There we are. We caught it right there, and up it goes. Here's one that was a bit slow, and that's why it's not numbered. And there was still a small trend that was caught. Then here's a major one, big volume coming into the market, a lot of energy entering the market, and there we go, a beautiful trend upwards. Then here's another example, a nice spike over the top of that barrier there, very early, gives you time to enter the market and ride that trend down. Another example here, nice spike, up we go. And the direction is very easy. It's always contrary to the trend. So in that case, the trend was that way, so it went that way. The trend was that way, it went that way. Trend was that way, it went that way. That way, it went that way. So it's a very easy system to use. Here we had a trend that way, down it went. Here very clearly a downtrend, big volume, firstly stopping the trend and then secondly reversing it, and up it goes. Same thing here, downtrend there, spike, uptrend. So it's a very easy method, high success method, and you'll see from the results that it produces the most amazing results. But it's important that you understand the concept of volume spikes producing reversals in the market. Okay, now this actual concept can be used for scalping, really good at scalping, but also for day trading, swing trading, and it can be used on any instrument. It can be used on indexes, metals, and crypto especially. Now here's an example of the results that we're getting from Forex, and there are the Forex. We're only trading the 15-minute and the 1 hour, 1 hour representing swing trading, 15-minute representing scalping. And you can see the fantastic results for one currency trading 1 year. Spreads are too high. Three pip spread is way too high for the year, but we are conservative with those. You can get these settings in MT4 and MT5. And here you can see, look at that, $39,000 produced, but the drawdown was only $4,000. Here's one, 27,000 produced, the drawdown was 2,500. Unbelievably good risk to reward ratio has been generated by this technique. As you've seen previously, it is a very reliable technique. Also, it gives you great return on risk ratios because you're using a small stop and a large target. So let's make a point of this technique. It's one trade at a time. So you're not trading hundreds of trades at the same time. It has a small stop and a large target. In fact, sometimes a dynamic target. It has very low drawdowns, as you can see here. The worst drawdown percentage that you can see here is about 3, so 9,000 on 34,000. It is very prop trader friendly because of the drawdown so low. It is ideal for prop trading, absolutely ideal. And the beauty is it can be used on very small accounts. Now, it can be used on accounts less than $100. And we often get asked all those questions. Have you got a prop trading EA that can be used on a small account? Have you got a low drawdown EA? Have you one that has nice tight stops and large targets? Do you have one that only trades one trade at a time? And here we have it. Beautiful EA that has been produced. So now the action for you today is to load the volume indicator onto 5 or 10 currency charts and use the 5-minute time frame and just play around with turning points. That's all I'm asking you to do. You have to convince your mind that the volume indicator is one of the best leading indicators there is, and that's the only way you're going to do it. So let me show you how to do that. Okay, so here's a 5-minute chart of the pound. It's current, it's a live chart. And what we're going to do now is we're going to add the volume indicator. So I go insert indicators, and we have a special section in MT4 and MT5 for volumes. You go and you load the volume indicator. Now, the default here will be a thin line like that. I like my lines as thick as possible, and then you can, the up value is green, the down value is red. You can change them around if you want. I like blue because blue on the chart is up and red is down. So there we go, and we click on it. So there we are, a bit bright, but let's go with that. And let's just say our level at which we want to trade is about there. Not sure, I'm just doing this on a random basis. and we want the line to be thick and red. Okay, so I don't know how this is going to turn out. I'm just showing you how to load the indicator. So there's our volume indicator. This is what I want you to do. And then we say, okay, now let's back trade this for a while. And then I turn off those ones that limit it to a bit. So we say, all right, there's our first spike over there. That's saying that the trend has been down. We now need to buy, and have a look there. It went into a buy mode there. So let's move on. Okay, so here we had a downward trend, got a nice spike. Oh, quite a big spike down there, and there's the upward movement. Here we are. Here we've got upward trend, downward trend. Oops, I've moved the chart here, but you can see every spike reverses the movement. That one there was one. You can say the movement was there, and that spike turned it around. Same thing here. Spike before the time, and reverse the movement. This one was a continuation spike, so that does happen occasionally, and that's why we need nice small stops. Here you can see a spike. It went right up, spiked, and brought the price right down. Here you can see upward movement, spike, reversal. Downward movement, spike, reversal. So that's the type of thing that I want you to do, is just have a look. And sometimes it's not that effective. This one, for instance, there was an upward movement there, spike down, and actually the trend continued down after that. So you're looking for the first, here's an example of one where the trend was very strong, went over, there we are, it went over and reversed the trend. Went over there, reversed, went over and reversed. So it's a continuous process. There's an example, downward and reversed. So that's all I want you to do at the moment, is to play around with the volume indicator. Make sure that you are convinced here's a downward movement, a spike, and it reversed the trend. And I hope you've enjoyed this video. I hope I've taught you something that you have not experienced before. And a lot of traders don't believe in volume trading. They don't realize that volume trading is actually a leading indicator, one of the few leading indicators that there are. And also, I wanted to expose you to our EA that produces these magnificent results that are ideal for prop trading, scalping, day trading, and swing trading. So from me, Alex Aploy, cheerio.